What's going on, everyone? My name is Nicholas Merton here from dYdX, and I hope you guys are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about one of the most exciting pieces of innovation I've seen in the DeFi sector in a long time. Today, we're going to be talking about a newly launched product known as MegaVault. It's one of the newest updates for the dYdX protocol, a protocol in which I've been following and using for over 5 years. It has been around as far back as 2017, not only making it one of the longest standing DeFi protocols, but one of the largest decentralized exchanges, rivaling major protocols like Uniswap, SushiSwap, Radium, as well as many other decentralized exchanges. So today, I want to spend some time to talk about what dYdX is, talk about MegaVault, how it effectively allows you to service as a decentralized market maker, and along with that, talk about the hard questions. How does the protocol actually generate the high APR that it's paying right now, around 37%? What are the downside risks as well that you should understand when participating in it? And overall, how you can go about making your first deposit. So let's go ahead and kick things off. If you happen to enjoy it, consider dropping a like, and let's dive straight into it. Now, I want you guys to understand that I wouldn't be bringing MegaVault to you if I didn't believe that this was something really genuinely exciting. And for me personally, I'm very big on protocols like Uniswap and other automated market makers that do also allow you to service as a market maker by providing liquidity positions. Now, AMMs work a little bit different from how dYdX operates. dYdX is a decentralized exchange. It's a decentralized perpetuals exchange that allows you to trade spot or on leverage across a variety of different pairs in the market. You can trade Bitcoin, Ethereum, Solana, Doge, as well as a whole range of different altcoins in major narratives and categories that we cover here on the channel. And they see tens, if not hundreds of millions of dollars in trade volume every single day. But the big thing that makes dYdX different from an AMM like Uniswap or SushiSwap or Radium is that it is not an automated market maker. It's like a traditional centralized exchange in that it operates in an order book structure between bids and asks, where people are essentially wanting to buy Bitcoin at a lower price than the recent traded market price, and there are people who might want to sell their Bitcoin at a higher price than the existing market rate. So this is essentially how most traditional exchanges, it's where the vast majority of trade volume in the world operates in an order book functionality of bids and asks and market orders that essentially are consuming either market buy orders that are consuming the asks on the order book, the prices where people are willing to sell, or people who are looking to market sell into the bids, prices where people are willing to buy. Now, overall, dYdX is already a pretty liquid exchange, but one big dynamic here is that when you start to trade a variety of altcoin pairings, for example, across most pairings, whether that's on a centralized exchange or a decentralized exchange, liquidity starts to get a little bit more thin. And you have a problem where if you want to buy a large sum within a market order, then it's essentially going to cause a lot of spread where you might end up having to pay a 2 or 3% premium on top of the existing market rate to make that trade. That's a big problem for traders. So we need to understand this problem first and understand the importance of market making. And essentially, that's what MegaVault helps to service as. In the same way, if you were to provide liquidity on a Uniswap pairing, that allows for less spread when you're buying a certain altcoin or selling an altcoin into a stablecoin or Ethereum. In the same way that that helps, we are essentially, through MegaVault, given an opportunity where we can deposit USDC across a variety of different pairs on the exchange and be able to earn an APR through the fees collected on the platform. So essentially, we're doing the job of what is usually facilitated on a traditional centralized exchange by a single counterparty or third party that facilitates this market making service. But instead, we are now getting to participate in that process. We don't have to do a lot of the heavy lifting. We don't have to run the automatic trading strategies that essentially build a market neutral position and provide liquidity on both sides of the order book. That's all done through dYdX. But what we get to do is be able to earn in the process. So we get to provide the liquidity, further deepening the order book and the liquidity and making dYdX more favorable to trade. So before we talk about kind of the APR and also talk about some of the downside risks of it as well and how the APR can fluctuate, what this essentially is a positive feedback loop. You have deeper liquidity, it makes it more favorable to trade on dYdX, therefore, ideally more trade volume comes onto the exchange, and that generates more fees for the liquidity providers. So this is a really great system. dYdX has essentially passed over the ability to do this to the community and being able to earn in that process. And as you can see here from the actual metrics here, the MegaVault has already netted over $3.2 million This data is verifiable, it's public right on the MegaVault page, and as you can see over time, it gives you a clear track record here with more up-to-date data in the last 7 days, giving you the fine detail to see how that yield is being generated over time. Now, as we talked about here, there can be ebbs and flows. There can be periods of time where either the P&L will essentially be neutral. You might see slight downticks here in the P&L, but overall, we can see that as TVL here has been growing over time, P&L has also been growing as well. And the APR right now, which is estimated over the last week, or excuse me, the past month's return, is sitting around 37%. So essentially speaking, how is this yield generated? We hinted to it a little bit earlier, but I want to be clear on this and also talk about some of the downside risks that can come with it. First off, the APR is generated, as it states here on the page, by essentially people trading on the protocol, so protocol revenue sharing, and also P&L on the underlying positions. So you can see all of the current positions, the allocated equity or capital into each position, and the past 30-day profit or loss in each of those positions. You can see that there's basically positions of all sorts, shorts and longs across a variety of different market pairings. This is basically what market makers already do. It's just essentially being automated for the end user here. So essentially, you build this market neutral position where you're collecting protocol fees as time passes and as people are trading across a variety of different pairs. And by owning a generally market neutral pairing, while there can be some room for fluctuation, generally speaking, it should be that you're in a market neutral position, you're hedged in both directions, and that you're simply providing that liquidity and getting the trading fees as people are trading on the protocol. Now, as more TVL is deposited into the pool, that is going to diminish the APR. It's going to make it lower because the fees collected, if the trade volume stays the same and more people are depositing TVL, the fees collected have to be spread across more people. That's why the APR can go down over time. However, if trade volume increases versus TVL or keeps relatively neutral, either the APR will stay roughly the same or it could likely move up over time. So this is an important thing to understand here, that generally speaking, that APR should find some kind of base, in my opinion, over the next couple of months here, probably around 20 to 30%, because what we're going to likely see here is dYdX, as it increases its TVL across a variety of altcoin pairs, makes it the predominant place to do trading in DeFi across a variety of different altcoins. That's going to boost trade volumes most likely, and therefore give that ability to maintain that APR. Originally, the APR was quite high when the TVL was a lot smaller than where it was back here in single-digit millions. It was up to like 90 or 100%. So you can see here that it is a fluctuating rate. It is not promising you a fixed rate guarantee. And along with that as well, not only will it fluctuate, but there again are short windows of time where you can see a slight dip here, as you can see throughout the past, right? So it's important to understand that there are risks associated with it. They cover this a little bit more in depth in the FAQ section, where you can understand some of the details around MegaVault, but overall, it is much more likely than not that this continues going forward. This is purely based on protocol adoption. It's focused on people utilizing the exchange. It's not some yield generated out of thin air like UST from the Terralit ecosystem, which, mind you, we never covered here on this channel. And along with that as well, this isn't the same as lending and borrowing protocols like Celsius or BlockFi or Nexo. What you're simply doing here is providing liquidity for markets. You are helping to make a market essentially for a variety of different pairings. And there's been a recent feature launch as well on the dYdX protocol, which we're going to do a full video on later on that further plays into this, known as Launchable, where essentially anyone has the ability to launch a whole range of new altcoin pairings on the dYdX exchange, being the initial market maker. And as time passes, the MegaVault will allocate capital to these different altcoin pairings, generating revenue from these different plays. And essentially, as there are these inefficient markets here, there's a lot of opportunity, as you're starting to take in these new altcoin pairs, to be able to make APR being a market maker, right? Because you're essentially facilitating a service for people who are looking to trade in these pairings, who are originally dealing with very large spreads. So there's a lot of margin to work with as a market maker within the MegaVault. So again, it's an important dynamic. Sometimes it sounds a little bit complicated. It sounds a little bit over the heads of many people, but overall, it's something that is time and tested in the crypto space. Market making is a traditional service. Whether you know it or not, like when you're trading on multiple pairs, you are likely interacting with a market maker when you're placing a market order. So it's important to understand that it's an integral part of the crypto space. This isn't something new, hypothetical, or some kind of far out concept. It's an integral part of the crypto space, whether you're using a centralized exchange or decentralized exchanges. It's just done in different ways depending on if you're using a centralized exchange or decentralized exchange, and whether or not it's an order book exchange or an automated market maker, right? So beyond all this, I want to go ahead here and talk about one thing, which is how you can go about actually depositing into the MegaVault. I've got about $98 here within my dYdX demo account. I'm going to go ahead here and deposit those funds into the MegaVault. So I'm going to go ahead and click max here. We're going to go ahead and click review. By clicking confirm, we agree to the MegaVault terms. We're going to go ahead and deposit it. Now, just to let you guys know, as this is going through, right, the important thing to understand is that you have to deposit some funds into dYdX, and luckily, it's quite easy to do that. I'll show you how to do that in just a moment. We can see here, though, that my position has been built within the MegaVault, so I've got 98 USDC within the MegaVault here, so that position is already live, and I've contributed to the overall TVL. But the main thing I wanted to talk about is how you can go about doing a deposit. In order to do a deposit, you have to go up here to the top right. Of course, you have to connect your Phantom wallet or your MetaMask wallet. Don't worry, it's safe. It's one of the longest standing DeFi protocols here. And outside of that, once you've connected your wallet, the source address, you want to deposit into your USDC balance. Now, there's going to be a little deposit icon here. Once you click on that, you're going to choose your source. You can either choose chains like Solana, or you can choose what I prefer, which is Coinbase. And from here, it's going to give you what's known as a Noble address. This is one of the cheapest ways you can go about depositing USDC from your Coinbase account into dYdX. All you got to do is copy that address. That's going to be at the bottom. There'll be a copy button you can use. Go to Coinbase, send crypto, select USDC, paste in that address, and then essentially send off the transaction using your two-factor device or any other additional steps required. And then once that's arrived in your account, you just got to simply deposit it here into this button and basically make the deposit. It's that simple. It's really not complex. It's a way in which you're able to get a really solid APR in the crypto space. And unlike a lot of yield farming, which pays you in speculative tokens or really just takes really nefarious paths to paying you 100, 200, 300% APYs. This is something that essentially pays you in stablecoins, in USDC, real protocol revenue, and pays a sustainable APR that may fluctuate a bit over time. Again, be open to the idea that this might drop to 15 or 20%, that it may also, if trade volume really picks up, if it's altcoin season and there's a lot of activity going on, as we saw back in November as this was launching, right? Back in November, December was a great period of time and has helped to maintain a really solid APR of 37%. The more traction and demand there is, the higher that APR goes. The more there's a growth in TVL and maybe the market's kind of stalling or slowing down, that APR is going to go down, right? But the great news is that so far it's shown a really solid track record of bringing in not only increased TVL as time passes, but also an increase in P&L over time as well. So this is a really exciting DeFi project. It essentially, again, like Uniswap, a liquidity provision, allows you to become a market maker on an order book based decentralized exchange. So I'm really excited to see where dYdX's innovation is going to continue taking it. I really think MegaVault is a really exciting product, and I think it's something that you should definitely consider if you're looking at trying to get passive income or some kind of yield within the crypto space. There are ways to do that within crypto, albeit not without risk, but it's one in which has a much lower risk profile than so much of the different yield farming or kind of stablecoin generating interest programs within the crypto space. So if you're interested, feel free to check out the link down below in the description if you want to learn more. Feel free to drop a comment down below if you have any thoughts, whether they be positive or negative. I'd love to get your thoughts down below in the comments. But until the next video, everyone, thank you all so much for watching, and stay tuned as well, as we'll be doing an instant market listing video for the new feature within dYdX later down the line. Take care, everyone, and I'll see you all in the next video.